And what we do over here is very simple. What we do over here is a very regular thing, just what we are doing right now. We just keep chatting and we pick topics from our discussion, mostly because most of our discussion goes around financial education. So we pick up topics from what interests us, and we go ahead and share what we know, what each of us know about these particular topics. And that becomes interesting. It goes into different areas because each of us comes from different countries, different legal frameworks. So it gets more interesting as we discuss these things. So it's a very informal kind of setup. Anyone can talk anytime, although I end up doing most of the talking for many of the times. So, not that I want to, but I would like participation to come in from everywhere. It just happens that I keep adding on to what people say, and probably I'm the oldest over here as well.
And with a lot of experience in that area.
Yes, I would say I was very fortunate. I worked when I was employed. I worked with a few startups. So and then when I got my own fire,
Mhm.
I started up with my own stuff, and I built a few businesses. I lost a few businesses. I lost money. I made money as well as I lost money. And of course, all these times I was not aware of the cash flow quadrants. So I had no idea of the cash flow quadrants. Although I had heard many times about the book Rich Dad Poor Dad, and I had the opportunity I had the chance to read this book on many occasions, but I never uh, opened the chapters. And so I was left behind. I had to learn through a lot of hard experiences, but in a way, when I look back, it has helped me a lot to understand what the book actually says. And I eventually ended up reading about six of Kiyosaki's books. I read a few other books which he recommends in his books. So, like Think and Grow Rich, or Seven Habits of Highly Effective People.
Yeah, I
Uh,
think you write these books and these names of authors in a book list and share it in
yes,
WhatsApp for a few months ago.
yes.
Okay.
So we could repeat that if it is interesting to someone. So we could create that again. So uh, the whole thing that I wanted to say here is most of my experience came first, and then my understanding of the experience, my understanding of what Kiyosaki is trying to say in his books. So what he warns of, I faced first, and then went ahead and read about, which was I don't think the order really matters, if whether I failed first and then read about it next, or I read first and failed next. It really doesn't matter. The whole point is actually
You
learn
will
something
face
from.
in any way.
Yes. Yes. So the whole point is that we learn from our experiences, because if I think it was Nelson Mandela who said, I would either win or I would learn.
Yeah, but in when you lose, you learn more and more of your mistakes, more than if you
That's
just you did it in the right way and succeed, I
Yes,
think.
that's exactly what he says.
Yeah.
I would either win or I would learn. He never uses the word lose or fail.
Yeah.
So he says, So what I understand from that is, if you're willing to learn from your mistakes, from your failures, from your challenges, then there is no failure. There is no real failure. You will win, which means you succeed, or you will learn, which means you succeed in learning something. So either ways you succeed, you win. So that was the best part of what happened to me. And what can I say? I'm happy where I am today, and I'm happy to be sharing about my experiences, which okay, guys, I've got good news. Okay, now see, I keep talking all the time, but I've got good news.
So
Okay.
I have actually question only. So do you know
Yes,
about anything hedging? Have you guys heard? I've been doing little bit research about it. Do you guys know about hedging?
hedging. Yes, I know someone who used to run a hedge fund, but I've not
Yeah.
never been actually a deep student of hedging.
Like, do you guys know like basically just what a hedging is and just basic definition, or what's the in at least in a financial term, what's its meaning, and like just for an investment purpose? Or we can
Anyone
just
wants to give
guess.
it a
Yes.
shot?
Yeah, just guess. It's not a, yeah.
Matthew, Glenn,
Yeah.
Faith, Queen.
How is the name? What is the name of it?
Hedging. Hedging. It's something to do with fund management. So you create a hedge fund, and this hedge fund, how you use the hedge fund to generate profits
I
is
won't
what.
say it's actually like in a context of fund only. It's as an investment one technique which is basically used.
Correct.
Hedging
Yes.
is actually like if someone wanna give a first shot, or should I explain? Like through my experience, actually, I've been doing a little bit research about it.
Do
Uh,
tell us by all means what you understand from hedging,
yeah, so
because
just
it would
validate
be
it if it's wrong or something. But yeah, so you Leo, as we have talked multiple time, right, about leverage. Like
uh-huh.
leverage meaning is just that taking an opportunity. Uh, like so leverage meaning is just to utilize all the opportunity we have, right? And let's say we have. How do I say it? Like, uh, okay.
Hello,
Okay.
Hello,
Hi,
Roger.
Roger.
I don't.
hello guys, how are you?
Nice
Hello.
to have you around.
I'm okay. Sorry for the late, but
It's
No
okay.
I'm
worries.
It's
okay.
No
okay.
worries. You are here, and we are happy.
Yeah.
Thank you, thank you.
Uh, all right. Shivam was just talking about hedging, and what he has just mentioned so far is that hedging is a technique of investment, and I agree completely with him.
Yeah.
So,
It's
a part
basically
of
a way.
hedging.
Yeah, it's basically a way of. It's a way of limiting your risk. It's actually so basically whenever we make any investment, right, it's always better to take an opposite bets against it. Let's say tomorrow, let's say we know that right now a coal and petrol prices is going to be increased because after coronavirus a lot of like a lot of shops and like demand of this oil will increase. But on the same time, we don't know if third or fourth wave of coronavirus can come, right? And that kind of
Mhm.
situation can always come, and there is always a fear of inflation right now in the market. To make sure that we don't end up in a wrong side of the like of wrong side. So what hedging meaning is to limit your risk. How to limit it? Just for an example, I said, like, if inflation is increasing too much, what we can do is we can just buy a gold like in an appropriate amount, so that in worst case in worst case things really go against our predictions, we need to know that how can we manage that.
Mm.
just for an example, let's say we purchased a real estate. We say it's a really valuable thing and everything. Let's say, okay, it's let's say like just like we have some houses, right? We find it out in a game. It was range between 20,000 to 40,000. But
Yes.
and we believe that when we find the house, it's of 20,000. We say let's buy that house, right? Because it's a buying
Yes.
opportunity.
Yes.
But let's say
Buying
tomorrow,
opportunity.
yeah, tomorrow something bad happened there,
Hmm.
and the price go far more below that. What will you do? How will you counter that situation?
Hmm. All right. So
For that reason, like you can have always another way. You have to think about that balance.
alternate
Yeah.
investment.
Yes.
Okay. All right. So Shivam, I'm just going to summarize, try and summarize what you've said,
Hmm.
just to clarify if my understanding of what you covered is right.
Yes.
All right. So what you're trying to say is you create a fund and you
Mhm.
use that fund to uh, diversify your investment into different asset classes. Like say you invest some of it in real estate, you invest some other portion in gold, some other portion in stocks.
Hmm.
Um, so you diversify your investment, and once you diversify your investment, if something happens, the economy is hit in a particular sector, only one asset class will go down. Your investment is more resilient because your funds are diversified into gold and real estate and stocks and
Yeah.
other opportunities.
Yes, I have actually something to share. Give me a minute. I will try to share it through my PC. That tablet. I have written some notes, so that will be helpful. One second.
All right, that's great. This is going professional. All right. In the meanwhile, all right, guys. I would like to know how many of you are using your laptop to connect.
Me, I'm using my laptop.
All right.
Yeah.
The reason is
Me too.
yes, Roger, Glenn. What about Faith?
I am using my phone.
You're using your phone. All right.
Yeah.
And Matthew as well.
By my phone too.
You're on your phone as well. Okay. Queen is on her phone as well, right? You already mentioned once. All right. The reason why I asked is part of this Zoom session, we use it to, all right, we're running out of time. We'll need another, in another 10 minutes, we'll need to restart this meeting. The link is the same. All you have to do is just go back and click on it, and we'll keep adding you back in. So that would be, all right. So we can, that's Shivam. Shivam, just give me 1 second when I just complete this one.
Sure.
All right. So one of the reasons why we suggest that if you join from your laptop is so we could play a game of Cashflow Classic, and we could base our discussions on the game and some of the principles that happen in the game. So Shivam just mentioned buying a house for 20,000 or 40,000. So this is a direct reference to the game. And if you want to have a common language, then it would be very wonderful if we can all join together on the game and we play the game and we see each other's screens so we know what deals we are talking about, what cash flow each deal means, what capital each deal requires. So we take care of all those things and we discuss with each other, and we benefit from the deals that everyone is doing. So we know what principles we need to take care of, what economic principles, what financial education we can get from each of those deals. So this used to happen a lot in the past. We've done this in some of our older videos. The intention is not to finish the game. The intention is to analyze every deal and learn from each deal. So we would have uh, a thorough understanding of what the game is trying to tell us. All right, Shivam, it's up to you if you want to start now or you want to wait another 7.5 minutes. I don't know. Just go ahead. Start. We'll continue.
I just want to say something. Maybe we will have some problem with the game because we are more than 6, and maybe we have to think some solution about that. Maybe 2 games, or maybe only the people with a laptop, because it will be easier for following the decisions and not be. Yes, you know,
Yes,
you know
I
what I
understand.
mean. Yes.
I think
So
like
yeah.
if even if we play one game and like even 6 people will play, right, that will be enough. And as everyone is sharing a screen, it's like kind of everyone is playing a game. It's not like everyone is making a decision there. It's not like a single person, and discussion is the most actually important part there, I think. Then
Yes, so maybe it will be okay if the people in this call which use a laptop play the game, and the others on the phone just watching we can communicate and learn and explain the game.
Correct. That would be perfect. That would be
Agreed.
perfect.
Good.
All right, Shivam, just go ahead.
just 5 minutes
Make
later.
it happen.
So
No worry, we'll continue right after that. So
sure.
the next session also we will just continue with your with the
Yeah,
same
so
thing.
this is
So
like some few points I thought, like when I was working on my thinking of like how should investor should have this minimum skills, I believe. So like when I'm doing a lot of research about the stock market and trying to understand what's going on, like watching lots of videos about that. So a
correct.
few points I think in that is like, first I need to know what's the predictability. Like when I'm buying a house or when I'm buying any stock, I need to know whether it's an overvalued or it's an undervalued asset right now. Right. And the second thing is patience. Like I have seen when I invested in some stocks, it usually takes a lot of time to actually get the returns. You have to be properly patient and you have to make sure you are not hearing rumors about it. Instead of that, you have a right value, right idea about it. And third part is negotiation. That is recently I'm getting used for my college. So I found out like you can actually negotiate in education. So it's a very good technique also that we will discuss later. But yeah, sense of money is also important to understand what's going on. Why are we doing this? Like what's the point of earning money on what it actually holds the value for. And last thing is control of risk. That was I believe so. It's my yes, we will talk about it in later detail, but I believe so the game which we are playing in that I was not able to get that how I'm accessing the risk. I know that the only risk in the game is that you can always chain a rat race, which is a very big risk. But if there is other real life risks as well, let's say in a bankruptcy, which is not a very ideal situation a person to be, or a big loss of money, something like that. Sorry, I think time is gone. No, sorry.
No. You have another
Automatically.
4 minutes. Don't rush. Don't, no worries. Don't rush, Shiva.
Yeah.
Take your time. Be relaxed because we are here for the next 1.5 hours.
Yeah. So these are the few points which I felt like basically I need, at least for me, to improve in myself to make sure that I'm very comfortable with the investment. And then I started a little bit about searching about stock markets and creating different charts and to understand what's going on, where actually I can lose money, and what can happen if things does not go according to my way. All right, and this diagram looks very weird, so I can explain a little bit. So do you guys have any idea about stock market? Anyone? A little bit.
Absolutely not. Not for me.
Yeah.
I stay away from stocks.
So,
Maybe I don't know a little bit. I searched a little bit about it, but I'm not very literal about it. So it's not. I'm not such a. Yeah, I'm just learning about it now. I'm
okay.
beginning to learn about it, but I'm not really far in that.
Can we do
So,
this thing? I can actually try to explain you a little bit about the stock market. It will take a lot of time, like to understand all the terms and everything. If we can discuss today, it's gonna take an hour. But what do you think, guys? Like, or we can keep it in some other time. It's if you're fine.
We can just go ahead. In fact, to be very honest,
Mhm.
because the stock market takes a long time,
Yeah.
I have personally stayed away from the stock market and learning about the stock market and getting
Mhm.
into that asset class. Because stock market, as Kiyosaki describes, is an asset class. It's
Yeah.
paper assets. So I didn't want to get into the paper assets market at all,
Mhm.
and that is the reason why I've always stayed away from the stock market. Mostly, anyone asks me about the stock market, I say I'm not an expert. I don't know anything about the stock market. I've never learned anything about the stock market. So I would really love to hear from you about the stock market, and I would be also interested if we can compare it with what happens in the game, because most people get confused once they start with the game. They think the game is about winning, and they go ahead and purchase all the penny stocks and things like that. So I know what penny stocks mean, by the way, because thanks to the movie Wolf of Wall Street, that was one of the very good movies to understand what penny stocks is and what happens in the world of penny stocks. Many people do. I mean, we see many videos on what penny stocks have done to people. They've made people immensely rich and all those kind of things. But I'm not sure if I understand that or I appreciate that so much. So I don't know. Anyway, guys, we're running out of time. 1 minute, less than 1 minute. Just join back to the same link. It works just perfectly fine. We do this all the time. So every time we run out of time, we come back and then.
Otherwise, Leo, try. Should I share my this thing? I think I have the account. I think we can use that, and we don't need
Okay.
to worry.
Shivam, sorry, I didn't want to join on the other one. I hope you saw the
Yeah.
message.
Oh, actually, sorry,
Okay.
I didn't reply. Did I reply? Okay, it's fine.
No,
Yeah, it
that's
makes
okay.
sense.
Don't worry.
Yeah.
Don't worry. I just wanted to share with you that
Mhm.
recording is also an important part of this mission, because we want others also to benefit from this one. And I believe you're using the Zoom account
University.
from your university. Yes.
Yes.
Okay. All right. Hopefully, I was trying to tell you guys that I'm starting a training program on entrepreneurship. So basically, I'm trying to share my experience with entrepreneurship and startups and things like that. So especially things which you need to be careful about, what could go wrong and why do they go wrong, because I've had a lot of time and the opportunity to analyze what I've done wrong in the past, and I've had a lot of opportunity. I had a lot of help from other experts and people who have been through similar situations. I've interacted with them and collected some information as well. So I'm trying to put everything together into a proper training program. So we could actually take this. Of course, it would be a paid program. I'm not doing any promotions here, but as part of that, we might actually I might actually get a paid account for Zoom, and then we might probably be able to use it without the time limits as well. I think time limits are also good in a way because I see positive things in most of the situations, and I say, okay, if you wanted to take a oh, all right, Matthew went to join the other one.
Yeah.
All right, miscommunication.
So I'm not
All right,
seeing here somewhere, but that's why I thought like he didn't get the message.
all right, okay.
Yeah, please continue. Sorry. Yeah.
All right. So once I kick that off, once we start off the entrepreneurship training programs, there would be probably a different club also for that. So entrepreneurs and people who go through the training can actually discuss their concerns, their daily activities, or on a weekly basis or something like that. So hi, Matthew. Okay, Matthew is still connecting his audio. So we would that there would be an opportunity for that, and once that happens, then I'd have a paid Zoom account, and we could use that as well, where we could have both the recording and the without the time limits. And if we have the time limits, it's like getting a break from your game. It's like a commercial break from your favorite football game or something like that. So basketball game probably, and you could take a leak, visit the washroom, come back. So you can always take grab a bite. All these things could happen between the breaks. Anyway, we don't take so much of time to go out and come back. Right. So since Matthew is here, Matthew, I was trying to kill time to keep keep everyone occupied until you dropped in, and then we could start the discussion on the Shivam's topic on hedging. Shivam, shoot, man,
Okay.
make it happen.
Yeah. So I need help though, like I'm not very good explainer. So I will try to explain you stock market in a very simple like way, and the way we can connect it with the real life, so that in other asset classes we can also connect, right? I have seen very similarity between real estate and actually real estate is one of the, I think, which is your uh, great chief point, right? I believe so, that real estate, and I tried to find similarities between them, and in businesses as well, but I'm not able to much connect with that. So you guys might be able to help me connect those dots. So yeah, so basically we all know it's a stock market basically in a stock market we have a one stock which has a different price ranges, let's say like up and down, and everything happens. Like I won't spend much time on it, but let's say there is a one stock, let's say any company, Apple company, which we can take, I think, which everyone knows about it in all the countries. So so company has
British Petroleum, BP.
Sorry,
Let's take British Petroleum, BP.
BP. Yeah. So what's the current rate going on with BP? Do you know?
I have no idea. I wish I hadn't spoken.
So you mentioned BP. So just for an assumption, let's say each stock is cost around 100 rupees.
Let's say dollars.
Yeah, dollars.
Okay.
I'm gonna use rupees, but it's mean dollar only, as just for
all right.
Yeah.
Okay,
Right.
guys. Shivam, me, we are both from India, where rupees is our currency.
Yeah.
Rupee is our currency.
Yeah, just assume it's the same right now, just so that I don't by mistake say it wrong and you guys don't take it wrong. Yeah. So this is a very simple thing, right? How a person make money from a stock market. One basic way is you buy low and sell high,
Right.
right? So if today price of any stock is $100, you bought in the $100 and sell it on 110, you earn a 10% profit, right?
Yes.
And there is another way also. Today you sell it at 100, and tomorrow you hope that the price of price of that stock will fall. Let's say it fall to 90, and you buy it during that time.
All right.
This is the one complicated way. I know. Basically, what happened here is like you basically borrow for certain period of time, and you sell it to the seller, and you buy it later,
All right. Okay.
right?
Let's say
Hmm.
there is a way to do this, right? It's called shorting.
Yes, it's called short covering or shorting. Yeah.
Okay. So basically, shorting is okay. Let me put it in simple terms. Basically, shorting, as I know, is about betting against the price of the stock.
Yes, betting that the price of the stock will
Will
go down.
fall.
Yeah, will fall.
Will fall. Yes. All right. So if the price falls, it's like you win the bet and you get your reward for it.
Yeah, so those are derivatives, right? Different derivatives comes. Those bets are called actually options in stock
Options.
market. Yeah. So what happened is, let's talk about. Let's say this is a price range. So I hope everyone is good in math. So I'm gonna be nerd out properly here. I'm gonna become.
All right, guys, get your calculators out. We'll get your notepads out. This is a very important part of our meeting. We always keep a calculator handy, and we keep a pen and paper handy, because regardless of whether we are playing a game or we are talking about something, we try and do our calculations by ourselves, so we become familiar with doing it ourselves. We know that we're going in the right direction. Calculations are something which help us to understand that we are in the right direction, and so it is very important to keep our calculators with us. This is, I can promise you, this is the only way in which I understood the game when I started off about 2.5, maybe 3 years ago. I think it's almost 3 years now since I've started playing the game. And when I started the game, I had very little input, and with a few tips from here and there, I started looking at every single deal, and I started writing down the deal. I started calculating different ratios based on those deals, and that's how I can confidently tell you, or I can confidently discuss these deals with you today. So it is very important for you to have a calculator, a pen, and a paper with you at all times. Even regardless of this discussion, even if you are in a sales discussion with your client, your prospect, if you are at work, it's always best to have a notepad and a pen and paper, I mean, a pen and calculator with you, because this helps you make a lot of important decisions. Shivam, please go ahead. I'm going to get my pen and no, I got my paper, I've got my pen, and it's back to you.
Yeah. So just to make sure that everyone understands the stock market, just think of each stock as one unit of a house. If any all people are aware about our game, so it's easy to actually little bit compare both. So think of each house. So let's start with very basic simple. How will you earn money through real estate? First, let's talk very simple way. What do you guys think? How will you earn a money from a real estate? Anyone will earn a money from real estate.
Rental properties.
Yeah, but for that you have to own that building, right?
Yes.
All right.
Yeah.
So what's your strategy starting? How will you start? Will you like buying, that's like, what's your strategy? How will you start? Like, you are starting with, you have money, but you now want to start your business in real estate. What's your first steps?
I don't know. Yeah, I don't know actually. Calculating.
Yeah, maybe like, I think as Leo, I think you can also say, like, I believe so. This is the right answer, right? First, usually we see two things: capital gain, and the second thing is the, as you mentioned, rental, right? So in real estate, it's two things we need to consider when we are buying any property. One thing is the capital gain, the potential of it can give us. Like, basically, if we are buying it for let's say $1,000, and if we are selling it tomorrow to 2,000, we are getting a capital gain on that. In a stock market, it is also called, this is same thing, capital gain only, right? If we were buying a stock of $100, we are hoping tomorrow it becomes the 200, and we are earning the profit out of it. Second thing, in real estate, it's called rental, as you mentioned, right? That eventually it should make some cash flow in a monthly wise, some positive cash flow if possible, right? And the same thing in a stock price, uh, it is called dividend. I don't know spelling, but yeah. So basically the same way. Basically, now whenever we are buying a one first stock, we have to make sure that it should give a good capital gain. It should have a potential that the value of increase with time. And second thing, it should also return a good dividend. Of course, all these things can be compromised according to your goals, and you can buy like take more dividend oriented, or maybe more capital oriented, right? That's the one way. Now stock market has been developed. Now has been a new player has come inside a stock market. What they say is, just like a real estate, they say that uh, instead of buying a house, you can purchase a house on debt, right? So just to explain you quickly about an option in a real estate sense, let's say there is a one house, right? It costs around 1,000, right? What I offer you, there is one option called call option, which means
Okay.
that, yeah, so which means that it's a contract which says that you own this house, and you pay the broker $10 only. You can own the house of $1,000, and within 3 months you can pay whole money of 1,000 rupees dollar.
Right. We do this in real estate as well.
Do we? I never seen it.
We do this in real estate.
What is it called
Okay.
in real estate?
I will quickly run you through
Mhm.
the process that happens in real estate. So let's assume you have the option of generating cash, but you don't have the cash right now. You have the option of generating cash, and you see a property which you are interested in. You see a property which satisfies your conditions of investment. So you say, I like this property. I would like to buy it. Here's a down payment. Okay, this is what you do even in the game. Here's your down payment. All right, and that down payment is your $10 that you just mentioned. All right.
Yeah.
So here's your down payment, and we get into an agreement which says in 3 months' time, 6 months' time, up to 11 months' time, you will not sell this property to anybody else, and that is the period that any time between this 6 months or 3 months or whatever is the agreement period, any time in between that, I can pay the remaining amount and I can own the property.
Yeah.
So that's what you do in real estate.
And if after 6 months you don't pay the money, then
You lose whatever you advanced.
down payment.
The down payment, yes.
Yes, right. So exact
Correct.
same thing happens in a stock market as well. It's
Uh-huh.
called options. Option meaning is just the same thing only. So if think about this diagram, now we come back to our old diagram. Now think of the same thing you mentioned, right? A house is costing around $100. You paid $10, right? That $10 is gone from your pocket, right? And let's say if the price of that particular real estate stay $100
Mm-hmm.
after 3 or 6 months, right?
Okay. Uh-huh.
How much your loss will be or profit will be?
Let's say you are. Let me get this again.
Yes,
Uh, you pay $10 as down payment,
yes.
and then even after 6 months, your the property that you want to buy
Mhm.
stays at $100, which means it was $100 when you paid the $10, and then it did not appreciate after 6 months.
Mhm.
Is that what you're trying to say?
Yes, yes.
Okay, so it did not appreciate after 6 months, which means, all
How
right,
much
your
will you lose?
loss. You want, if you look at the loss, I would say, I don't know how complicated it can get, but I would say you would lose, at minimum, you would lose the interest rate of 6 months' time.
Interest rate of what?
Interest rate of your, okay, of 10% of your $100, which is your $10.
$10, right? Interest rate, but like after 6 months, you basically you saw that there is no like capital gain
Appreciation.
happen, right?
Yes,
Appreciation
yes.
happen, and your contract basically kind of dead, like it's gone. Now
It's
after
gone.
that, the $10 also you won't get, right?
$10 also you won't get. Yes.
So the loss will be 10 actually. Like the whole 10 is gone for you,
Mm. Yes, yes. Okay. All right. Okay. Now,
right?
which means you are not purchasing, but you still have the option of purchasing it at $100, right?
Yes, you
So
still
you invested 10, you put another 90, and you can purchase it at 100,
have.
or you can say, okay, I lost $10 and I would let it go.
Yeah. Because there
Right.
is no point, let's say tomorrow the property rate is like, let's say $90, like you purchase it at 100, it becomes $90. Why will you buy, why will you take that, right? There is no point of taking that. You will basically end up with a loss only,
Hmm.
right? So now things become exciting when actually the price of a property increases within that 6 month,
Yes.
right? Now let's say the property rate has increased to 110 at that point.
Hmm.
So what will be your profit and what will be your loss? And like others can also answer this.
Yes, I think others should answer, and I will keep quiet.
So I think $10, the difference between 110 and 100 will be our profit, because we
Mhm.
agreed to buy this house or this option or opportunity in 100. So in meanwhile, for these 6 months, the profit just um, increase the price, but we have agreement to buy it at 100, right?
So property is increased to plus 100, right? Plus 10,
Yeah.
you got the profit. Now you
Yes.
invested, initial investment was 10 rupees, which basically kind of to book the property. And you also have to pay to take that profit, you also have to buy and sell the particular stock, which is negative by, which is like basically you have to buy that, which is 100 that you bought that stock, and then you will basically sell that stock, which is once again, so which is 100 again. And just remove the profit one, because basically I'm selling it at 110.
And 10, right?
Yeah, once again that, yeah, 110. So what's the profit here? Am I correct or wrong? Something I did a mistake. Sorry, this is a negative. This is negative. This is positive. Sell basically bring money inside our pocket, and buy and initial investment take money out of our pocket.
It's break even.
Zero?
Yes, zero.
Yeah.
Right?
Just
But
break even.
Yeah. So that's the thing. Like basically, if you're buying a real estate and after a 6 month, you end up paying the same amount which you earned, you are not earning anything. That's as a simple mathematic model we can see, right? So,
Right.
so
That's why I said. That's why I mentioned about complicating it, because if you look at it in real estate perspective,
mm,
when you make an advance, you don't really consider, or you could consider, but you really generally don't take into account the interest that it could earn when if your money would sit in the bank instead.
yeah, we can actually like from this perspective, I believe like I think in the stock market also like that money, of course we can consider it. Of course we are just taking a 10. The people who actually invest, they must be investing in crores and everything.
Hmm.
But the
Yes.
idea is like that's interest rate is something is always an ideal situation. Like if you put it in a bank, that money will always be there. So
Correct.
that right now it's not being considered as such inside this.
Hmm. Yeah,
In,
because yes, who said something? Someone was trying to say something. Glenn, was that you?
um,
No, it was not me.
yeah.
All
So
right.
now if it becomes 120, what it will be?
Okay. So
How
that
much?
would
10
be
then.
profit of 10.
Sorry,
Yeah. 10 then. Like 10.
right? And similarly, if we say 130,
Still higher, 20 in addition.
right? It will be like something like this.
Yes.
All right, guys. And now the interesting part here, if you see it, like let's say the property actually from 100 to 120, it has become 100 to 120. Can you tell me the percentage of profit you earn on your investment?
Percentage of profit drawn on
Your initial investment was
100.
10. You 100,
Yes, of
uh,
course. Yes.
like that's what like leverage. So,
Yes.
and
Okay. So you get 6 months of leverage, and then you make your 10, or you break even, and then you start climbing higher.
yes. So the initial investment you put $10, and and you like that basically after 6 months you buy it, because like after 100 it's better to buy. Like of course
Mm.
after 110 we can see that it break evens and give profit only. And for
Mhm.
120 I bought it. What it will cost me 100, as like it will be same for me no matter what,
Mm.
right?
Right.
For those 6 months, and after that I am selling it for 120.
Right.
Now selling is a plus, this is negative, and this is negative, which is uh, 10
10 profit. Yes.
profit, right? Now our initial investment was 10 and our profit is 10. So just a basic formula of our profit percentage is 10 by 10 into 100,
Mm.
which is,
Right. 100%.
yeah. So you can see it with just 100. If you see in this context, if
Mm.
you are like just like if even if your investment just increased only the real actually asset lie inside that property increased only 20%, like from
Mm.
100 to 120, your profit increased to 100%.
100%.
Yeah. And the same technique you can use it for a different like I think a real estate is also, as you mentioned, all this down payment is there. We can use the similar way of
Mm.
that. I know it's like real estate is not that liquid. Like you cannot instantly sell and just assume that we can just sell it and buy it. And that in that context, it looks like just that's why many big players prefer to play this way instead of just buying a stock and keeping it for there. Right now, the biggest important part here is tomorrow if you go bad, like you predicted tomorrow, no man, like you predicted 100, but somehow let's say coronavirus came or some very bad things comes up, any things it falls, any range it falls like below 100, your loss will always be limited to 10 rupees only, that 10 only.
$10 only. Okay.
Yeah, but now do you think this is a good idea when you know that stock is going to increase? Like there is a good probability that this stock will always be upper side only. What do you guys think about it, this strategy?
If
I think that if you know that the stock will increase more than 10%, it's okay. If you will get far from break-even point, but between 100 and 110, you will lose like stock will gain 5% and you will lost 50%. So you need to be very sure about that increase
Yeah.
will be more than 10%.
And like actually right now the expert has come. I think I think Ersin has a good knowledge about it. It's actually in a
Yes.
instance actually.
Hi, Yasin. Nice to
Hello.
see you.
Nice to
And
see you too.
it's good to have you around because Shivam has actually been taking us for a ride. He has been telling us things that we don't know about, and so we have no choice but to listen to him.
I have one stupid question. Why we calculate initially investment and buying together? And this is 110 when we buy it for 100 and we invest $10 in advance. But after that, in after 6 months, we pay another 990, not 100. So this is a little bit tricky for me. And if you can explain one more time for me.
Yeah, so that 10 is actually like I think I'm not sure about Lijay, is it valid or not, but basically that $10 is a premium actually in a stock sense. I think in real estate when you pay a 10 actually it get deducted from your property amount, but in this case that $10 is extra amount you pay just to keep that contract. That's just considered like an extra fees that we are paying. They are like it's just to give us a flexibility to buy anytime. But
okay, but you buy it for the whole price. It's not like prepayment.
Yes.
It's just the cost of opportunity to have time, like 3 or 6 months to buy it on 100, right?
Yes.
Yes.
Okay, thank you.
That's a really nice point that you brought up, Victoria, because you mentioned one word over there, which is the cost of opportunity. I think this is something that we need to keep in mind for our future discussions. We might have an opportunity to discuss about cost of opportunity or opportunity cost in the future. In one of our sessions, we'll definitely take it up, or we'll come up with this. So this is something that you need to look out for. Cost of opportunity. What does it mean? You could even research it in the meanwhile, and before the next meeting, which is on the next weekend, next Saturday, same time, exactly a week from now, you could come up with the what you understand about opportunity cost, and you could also come up with examples. You could come up with the real life situations if you've faced any, because this is something, basically financial education is all about decision making and how good you are at decision making. So opportunity cost, understanding opportunity cost is one of the very important factors of decision making. And this is, of course, going to be included in my entrepreneurship course. So if you want to know more, come join, pay me. Right, no. But yes, these are topics which I'm reading about or researching or putting together material for, because we're structuring this into the training program for entrepreneurship. But the fact is, uh, this is a very important factor that decides our decision matrix. I call it the decision matrix because basically, uh, now, for example, Shivam mentioned a few things over here on, and Ersin did mention. If you know, Ersin said something like, if you know that the price of the stock is going to go higher, if you know that the price is going to increase. Now, this if you know is a big if when it comes to decision making. And that big if, you can handle that if only by research, only by learning about the trends, only by learning about what influences the valuation. Now, valuation is a term that we have very often used in the past. We have discussed this many times. But we need to understand what influences the valuation of an asset, whether it is stock or real estate, or it is a business, or it is a product that you want to put out in the market. What is going to influence it? Now, if you know many factors, now this is one of the reasons why I stay away from stock, because the factors that influence stock, there are many of them, and it is very difficult to predict, at least for me, because I don't know much about it. It is very difficult for me to predict what is going to influence the price of a stock. Now, if I know what is going to influence the price of a stock, I can make a decision. But if I don't know what is going to influence the price of a stock, then it is very difficult for me to make a decision. Now, this is one of the better things about real estate, which Kiyosaki himself mentions. Real estate is not as fast as stock. Real estate is slower. Real estate has more stability. It does not have the kind of volatility that a stock has. If you want to look at the volatility of a stock, let's say BP. Why did I mention BP before? Because BP is one of those very vivid memories, very strong memories in my business studies. Now, BP recently is like about 10 years ago. So in last 10 years ago, BP had an oil spill in the Gulf of Mexico. Now, when that happened, it was an accident, and when that happened, the stock of BP just fell as if it was an asteroid. So the stock of BP fell. The CEO had to resign, and he had to be replaced, and all those kind of things. Of course, all that is part of a corporate game. It does not matter. But the point is, the stock fell, and it was impossible to predict how much it would fall, or it was impossible for a common man, a person like me. If I owned some BP stock, the only thing that I could do is watch it fall, because I would neither be able to control the fall nor be able to influence the price. So this is where real estate differs from stock market, and this is why many investors prefer real estate, gold, these kind of asset classes rather than stock, because stock has a kind of volatility, it has a kind of speed in volatility, which can be a little difficult for a common investor, a common stockholder to manage. Whereas in real estate, you can do a lot of things. You can create something in the real estate which makes it appreciate. You can create something in your. You can make an investment which creates a cash flow for you. So it could be capital gains, it could be cash flow, or it could be both. So all of these can come into. There are a lot of options, and those options are slow. They are not fast. They're not at a high pace, and this is what happens. This is why one of the reasons why Kiyosaki prefers real estate, and we are running out of time. That's the last 1 minute, so we're going to come back to the same meeting, and then Shivam is going to continue with what he wants, and Asin is going to watch and tell us whether he is actually saying the right thing or not.
Yeah, validation is also. Yeah,
This is getting
so
interesting.
yeah, so this is a call
Asin
option.
is around.
This one is called call option, and now we will discuss about anything you want to add, Arsin, here, or like, did you get to check it out this call option? Anything?
Actually, I don't want to add anything here just because I joined it late and I don't know what you have explained
So
before. So
talk about put option, and right now let's then you can just like the same way we can discuss about it more. So what is a put option that right now we were discussing about it? Short, like shorting a particular stock. So this is a one technique of shorting a stock. It just means that basically you are betting against the stock. So what happened is basically you now believe that that the particular stock will now fall its value. So what happened is in that case there will be a premium which you will pay. Let's say just for this 10 only, you are paying 10, and that premium is sorry, yeah, you basically pay a premium. If the stock price increases, you will not get any profit out of it. But if that stock price's value decreases, you will get this type of this type of uh, profit accuracy. So like basically in a stock market, this is called a strike price, the current price of a current stock, or like on what you are purchasing, that on like whether it will be below 100 or it will be above 100. So it's just an
actually,
opposite.
Run that through one
strike
more time.
price is not the stock price at the moment. It's call and put. The both options are an agreement. You you agree to sell that stock at $100. It's strike price. Stock price can be 150 or something different, but strike price is the price you agreed to sell and buy.
Yeah. Yeah, that's what, like it should be in the market and out of the market, right? I think this terms
Yes.
being used. So strike price is actually, it's not necessary that like strike price needs to be the current price of a current asset. Let's say in a real estate, let's say like we know, right? Everyone thinks a different price for a different property and everything. It's just an agreement you are making on a paper that like on this particular price, you are going to give me after 6 months. This particular price. Yeah, so in that sense, basically, so what happened is this put is basically I'm selling it right now and I will buy it in future. Is that right, Arsin? I think for a put, will that
For
be?
the put,
Yeah.
if you buy a put option, you say that you will sell the stock from $100 at strike price after 6 months later.
After 6 months later. Yeah.
It's the time can change because there's different time scales on options. It's only about agreement. So You can write it 1 month or 6 months or
Any
a
tea
year.
time. Any tea time, yeah.
Mm-hmm.
Like
Yes.
any time it can be. Just for our reference, we are just taking 6 months or like that way.
Mm-hmm.
Yeah, but the goal here is basically right now there might be some people who say that, yeah, how can I earn a money through a stock market when I know that market is in overvalued or market is
Yes.
going to increase. So this is one of a way you can do that. In that sense, it's put is basically a contract which basically says that it's cost you around, like, let's say for our example, it will cost you $10, and it says that like if only the price of that stock will go down, then you can basically buy it at that point.
Yes.
After 6 months or any time.
Mm-hmm.
So in this case, just for a quick example, let's say the price of the stock become 80. Can anyone tell what will be the profits? Not a sin.
Okay, I will mute it.
No. As you know it already, right? So others are able to understand it or not. That's why.
All
Just
right.
yeah.
Okay, so you have a strike price of $100,
Yes.
and right now the current price is $80.
Yeah.
And and you have only invested, or you have put $10.
Yes.
So that means you would lose $10. But
So which option you are talking about? Are you talking about call option or put option first?
okay, if it is a call option, if it goes up, you buy, or you lose your $10. Okay, so if it is a put option, what you mean to say is it is the opposite. So if the price goes down, then you can buy or you can sell.
So basically, put option is just like assume that you have that thing and you sold it at that time.
All right, so the price has come to 80 and you are selling your stock.
Yes, you're
But
buying at that. You're
Actually,
buying.
you are buying
you're
it.
buying, okay, you're buying it. All right. So your strike price is 100, which means you agreed to buy at 100, but right now the stock is only 80. No, I didn't
No,
get that.
actually,
I didn't get that.
put option is something like that. You have the stock and you are buying the opportunity to sell at strike price.
All right. Okay. All right. Okay. Now it makes more
Sorry.
sense. So right now the price is
Yes.
80, but your strike price is 100. So you can sell at 100,
While
although
price
the
is
price is
80.
80. All right. Okay. That's cool. I'd like to do that in some real estate.
So in that case, what will be the profit?
Okay. So you would get $10 in profit.
Sorry?
In capital, you'd get $10 in capital gains.
So it will be 10, right? Yeah.
Yeah, because you already put 10 as an advance or a advance fee or opportunity cost, and you can sell at 100. So 100 minus 80 minus 10 is 10, right?
Yeah. So at this point, I want to ask others also if they understood it or not. Like this is the basic thing which I actually is very important to understand to really actually make money, which I've understood it from the stock market, which I think, does anyone has any issue or like want to understand it? We can discuss about it really. Like this is the main concept we need to know, very basic of stock market to understand stock
All right,
market.
that's cool. Now
I have a question.
Yeah, Glenn.
So you actually now, can I try to understand? So you actually bought it around 100, And you bought the full stock then, or did you just pay 10, or I don't know? So you bought the stock?
You pay 10 for opportunity to pay to buy the stock at 80 and sell it in 100.
Oh, okay, yeah. But you took both opportunities at the same time. So you
No, actually, you have bought only the opportunities sell for 100, but stock you don't have the stock right now, and you are waiting to fall the price from 80. You buy stock and sell for 100 with your agreement.
So,
80
okay.
is the market price. You don't own the stock that at that point.
Oh, yeah, okay.
Okay, I think I will add a little bit from Kiyosaki, and it will make things easier to understand here. In any asset, what Kiyosaki says, and this is not what he normally says or not what normal people understand. So this is a secret kind of thing. So what he is actually saying, it is not about owning the asset. Now, initially, Shivam asked a question. Um, what would you, and Glenn, you answered that question, or you tried to answer that question. And he said, he spoke about, he was asking about how do you go about investing in real estate? What are the steps that you take to invest in real estate? Now, this is from my experience as an entrepreneur, as a with startups. From my experience, from what I've read from the books, from what I've heard from other entrepreneurs, this is, it is not about whether you own an asset or not. It is whether you control an asset or not. Everything about investment is what do you control, not what do you own. You owning something doesn't mean you control it, and you controlling something doesn't mean you own it. It is not equal to each other. And what is happening here in the put option and the call option is you are only buying an option, you are paying a fee to control this particular asset. So with this $10, you are actually taking charge of this asset and holding, reserving, or acquiring the ability to control this asset for a period of time. It could be 6 months, it could be 1 year, it could be 3 months. I don't know how it works, but it is for a definite period of time. You are gaining control of this stock, and you are saying, if this condition happens, then I will make a profit. So it is that kind of control, and this is the choice that you make when you pay that fee, and this is the fee for gaining, taking charge, controlling the asset.
Yeah, actually, that's the right term. Like controlling that, the $10 is just the control price, if we say that, right? As a price, you have the right. Basically, option meanings is also like it's actually definition is like you have right to sell or buy. Like if you buy a call or a put option, but you don't have any liability. You will just lose 10. You don't have to buy, but if you wanna buy, you can buy.
Now, this is something that we need to keep in mind for handling any asset. The reason is that you can take control of an asset by investing money, investing the whole amount, investing the whole capital, or you can find a way to control the asset by investing nothing at all. And this is what I was discussing on the group when Jimmy asked a question. I think it was Jimmy who asked a question. How do we? What could he do possibly do after when he gets his vacation after his I think it was
3 months, I think he
Jimmy.
wanted to take some
Yes,
and
it
some.
was Jimmy. Yes, Jimmy was trying to get some advice. This is something that I want to challenge you. This is like a brain challenge, and this is about: are you able to identify an opportunity, or at least a business model, where you can invest nothing, zero investment, and you can make a profit or a cash flow? Either, I mean, you can make money either as capital gains or as cash flow. So is there a way to control an asset or some assets? You can control it with no cost from your side, but you can make, either you can make cash flow or you can make capital gains out of it. Now, if you can work out these options, uh, this is the core of what Kiyosaki mentions as leverage. How little do you spend, and how much more control, how much of control can you get? Spend the least amount, get the maximum control. But this is the challenge that we face as entrepreneurs, as founders of startups, or people with business ideas. This is the challenge that we face, that how do we create assets out of nothing?
I have met with a guy this week, and he was just selling on Amazon. He is making dropshipping, but he has a very different way to do it. Because normally shipping companies are connecting to your account, and when someone orders something, they send for you, and the profits of yours could be 1% or less. This man made that something different, that selling on Canada and buying from America, US. It's both Amazon accounts, and uh, he said that the Canada prices are a little higher, so you can make between 20 and 30% from one product. So he start to sell something from America in Canada, and when he received an order, he just put his credit card to buy the product from America and sends it to Canada. And between 1 or 2 months, he receives the money back to pay the credit card. And the only limitation is the credit card limit for him. He didn't spend even $1 to this work keeps going.
So zero investment
Zero,
and
totally zero.
infinite profits.
Yes.
Interesting.
I recently met a 14-year-old boy. I think he must be 14 or less. So a 14-year-old boy who took charge of an opportunity in a beautiful way. So he comes from a remote village in India, and what he does is when his in his school. So remote villages in India have very few educational facilities, and in such a place, he found an opportunity where his classmates, every time they have to give an exam, they would go to the nearby shop, a stationery shop, very small stationery shop, and they would buy sheets of paper. So they would buy 40 sheets of paper. I don't know why 40, but there should be some reason why he says 40, because what he did instead, now this 40 sheets of paper looks like a retail opportunity. What he did was he went to the shop. He buys the whole ream of 500 sheets. He pulls out 40 sheets each, and he sells lower than the nearest shop where the whole rest of the students. Now, if you look at a class, if you look at his age group, I think there would be somewhere like about 100 students over there. And so he would start distributing, he would uh, pull out 40 sheets, exactly 40 sheets. He would pin them together, and he would hand over to the students at the examination hall just before that. So all they had to do is bring their money, and which was considerably less than what they would buy it from a shop for. And he would offer them these bundles of 40, and they would buy it cheaper, and he would make twice as much or thrice as much money because he buys the whole thing in a 500 sheet. So he had an opportunity, he had a market which was open right in front of him. He had an advantage in that market. And while everybody else failed to notice that opportunity, he found that opportunity, he picked on that opportunity, and he utilized it because he had the kind of advantage in that market. So this is a real life incident which happened. I happened to hear about it from the same guy who did this hustle. I heard from him directly over an online meeting like this, and it was really mind-boggling how he came up with that kind of an idea. But this is what Kiyosaki says again: watch the trends. The trends will give you a fair idea of the predictability of a business. If you want to move ahead, if you want to identify these kind of unique opportunities, uh, if you want to be sure of your steps, then look at what has happened in the past. Analyze why it happened, because this question of why is very important. Analyze why it happened, and see if the same reasons are relevant in today's situation in probably a different way, slightly different, but definitely relevant, because you apply the same economic principles regardless of whether you are in a digital world, you are in a physical world, or you are in a pandemic situation, you are in crisis. The same economic principles apply. You just have to discover which one you need to apply in this particular situation so you can take advantage of that situation you can make a benefit, not just for you, but for everyone else as well. Because according to Kiyosaki, again, if you solve a problem for one person, you have one person as a client. If you solve a problem that exists for so many people, then you have a whole market. So whether you want a client or you want a whole market is the big question. And for that, if you want to identify those opportunities, you need to be able to study the trends. You need to be able to understand what has been happening in the past. You need to be able to track, analyze, understand, and say, okay, this is exactly what is going to repeat in today's situation. It could be something from 50 years ago, but it is 50 years ago, there were people in this market. 50 years later, there are still people in this market. So it is going to apply universally. The only thing is we need to learn how to apply it. Now, this is the same thing that happens in the game as well, because I think we have about 10 minutes or 12 minutes remaining. We'll soon have to wind up this meeting. But I just want to conclude. And Shivam, we will continue the battle of wits between Shivam and Ursin in the next week. Definitely. This is getting very interesting because I'm very happy that Shivam has come forward to present, or in fact, take the ownership and move ahead in this in these meetings, because it used to be mostly me speaking, or that used to be the case, unfortunately. But today I'm very happy that Shivam has taken the lead, and he has demanded his time, and he has made it worth his while. He has made it worthwhile for all of us, I'm sure. And I'm just adding to what I'm just using the opportunity to share a few other concepts as well, because these are some things which we need to apply in everyday life. We need to practice so that our financial education is not just information that we collect, but it becomes experience, it becomes knowledge, and we are able to use it, put it to good use, create markets out of it. All right. So this ability to track the trend is what Kiyosaki says is the most important thing, to learn to control your assets. Learning to control your assets is a way of owning the ability to use an asset for making profit, for making a benefit, without actually paying the full price, or in some cases without actually paying anything at all. So this would be really interesting to see. And this is this I would suggest that we make this the theme for the next 1 week, where we can actually identify something that I've seen in my experience, is the ability to identify, study business models, to study how each business works, what makes a business work, what is the attitude that makes a business work, what is the principle that makes a business work, what is the kind of legal structure in which each business can operate. How does a business find opportunities to expand? Is it expansion in their product line? Expansion in their product line, or expansion in their production line? So there are two things. One is vertical integration, and the other is a horizontal integration. I'm sure you've heard these terms many times before, but one is increase in the range of your production line, which is your vertical integration. You do everything from raw material production up to the finished goods. You control the whole process, or you control a whole market through branding, through creating a brand image, through creating a goodwill for your brand, for your company. You create more products which appeal to more people, and you become powerful in the market. So all these are things that make a business work. All these are things which move our um, ability to control assets, ability to make a benefit, make profits out of these assets that we control. So let's take this up as a challenge for this next week, if I may suggest. Let's look around, identify business opportunities or business models, and try to factorize, try to break down into small bits every single thing that contributes into the success of a business. And Shivam would definitely be challenged to study more, learn more about stock market, because Ersin would then be also motivated to come up with. I don't know why he's never come up with this topic before. He's got so much of
Actually,
information.
Shivam has explained very well, but because no one knows about the options, about call option or put option, uh, it's hard to explain someone how to make the addition. 3 plus 2, it's 5. How can you explain that?
Yeah, actually,
That
this one actually just an introductory. I was actually giving the main context. Actually, I wanted to give. That's actually just basic terms. Actually, if I think
yes.
Justin might be able to understand, I was gonna show this graph. Actually, this complicated graph, and like I was going that direction, and then you guys can like there are way too many like techniques which you can implement using, and you can limit your like you can highly certain that you can limit your loss, but you can gain a good profit out of it. So it was actually like right now it's just an introduction I was trying to give. Yeah, I'm very bad so explainer though. So that's the
No,
little bit.
I think you're very good. The only thing that I would suggest is that everyone who's participating,
Yeah,
we should feedback what we understand. We feedback, and once we feedback, we know if we understood correctly. Shivam knows if we understood correctly. Ersin knows if Shivam explained correctly. So all this can happen only if we feedback. Communication is so important, and which is one of the best things that happen in this kind of a platform, that we are able to freely communicate. It doesn't matter whether we make a mistake or not. It doesn't matter whether we got it right the first time or not, because we have the option. This is among friends. We are open books over here, and this is the best thing about this platform is that we can discuss and say, okay, here's my understanding, am I correct? And this would be very, very important for us to grow, because if we are not willing to ask that question, am I correct or did I go wrong? If we are not willing to ask that question, uh, the other person, or like say Shivam, would assume that we understood something while we have not understood. And as he explains, this is just the very basics of stock exchange, or this is the very basics of stock trading. So if we do not get this part, then how would we move forward? So the most important part is that we are open about, and we are open and okay that we don't understand or that we didn't get it right the first time. We are able to come back again and again, and we are able to listen to it in different language. Now, when I explain my understanding, it probably helps somebody else to clarify their thoughts as well. Say, for example, today we had the option. Now, when I just replace the word option with the word control, and the advance charge or the fee to buy the option with the word control, charge to control the asset, it made things different. It made things more universal, because this is something that you apply in stock exchange, and this is also something that you apply in real estate. This is probably something that you would apply in any situation where an asset is involved and a control of an asset is involved. Because when you lease a property, this is the same thing that you do. You lease a property and you say, okay, I'm going to use this property, I'm going to make money out of this property, I'm going to put this, I'm going to take benefit of this fee that I'm paying you, and I'm collecting this control of this asset. So everywhere it becomes universal when you replace certain words with certain other words. And then when it goes to the particular industry, probably you need to know more, but this forms the basics. So I think I'm very happy with today what happened, because this was a big challenge for me to get into stock exchange, get into stock trading. I just wanted to stay away from it because, like Kiyosaki says, I'm happy with the slow assets, not with the fast ones.
Yeah,
Guys, anyone wants to?
important actually, like as like Leo has mentioned, right? It's always a person should have. That's what I actually understood. Like when I kind of try to talk about the real estate, about the stock exchange. The idea is we should at least know the basic terms, at least the idea how others are working. Like just now, I think Sin mentioned something about that drop shopping, something shipping, right? Which I actually am when I just reached Canada, it was like everyone is, I have a brilliant idea how to earn money through drop shipping. Just subscribe me, subscribe that. There are lots of ads whenever I was watching YouTube videos, right? But yeah, I was like, okay, that's fine. But how do I know that they are good or bad, or whether I should go in that direction or not? So if by talking about this different asset class, as we discussed, right, it's a good opportunity for us, because this is something we can interact. We all are learner here. We all are like have a different experience in different industries and different like in a different way, so that tomorrow someone talks about, let's say in a entrepreneurship, we talks about the equity and control, board control, I think, and like there are number of board directors are there, and then there are CEO, CTO, which I think Lijo explained me one day. Like there is a huge difference between director and like CEO, CTO positions. I thought they are same. And the similarly way in a real estate, as you mentioned about the rental contracts and premiums you pay, down payments you pay, then you can take a leverage. That's what I believe. So yeah, having the information of everything is like, at least the basics should be clear, so that tomorrow if someone is telling you that something about it, it's easy to understand, easy to grasp.
Right, guys, officially this meeting is ending. This week's session, I think we had a brilliant time. So glad. Glenn?
Yes. What?
What did you feel? This was your first time over here.
Yeah, it was really interesting. Actually, I learned a lot, and yeah, I was, yeah, it makes me, yeah, I learned a lot actually.
All right, so we're coming to an end. So if you have a feedback, you can post it in the group. You can post it in the WhatsApp chat, and we can take it up from there. We'll see how we can make it better.